they connect and bloom, oh, bloom. Showing if they connect and bloom.
I I love having Dr. Melinda Knuth on the show because every time we put that song, she starts dancing. Or I see her in the background. So, so good thing. I think we're gonna change that song for next year, or maybe we'll keep it. We'll see. We'll maybe make everybody vote. Sorry for the little halo around me today. I didn't have time to put on my green screen, so you're gonna have to kind of deal with that. You'll see it less later. But welcome to the Bloom Show. This is Saeed of New Bloom Media and New Bloom Solutions. And the Bloom Show is made by the floral industry, by the floral community, for the floral community. And this year is all every year we do end of the year report with Dr. Melinda Knuth and Dr. Charlie Hall. Dr. Melinda Knuth is a professor, a assistant professor at North Carolina State University, and Dr. Charlie Hall is a professor at Texas A&M. And they're very well rounded when it comes to understanding floral trend, from trends to economic impact. So how the economy will impact next year and how did it impact last year. So the goal truly is to kind of see how this year was, how did it go, what were some new trends that might have popped up, some new effects from the tariffs, and then kind of look into a crystal ball and say, this is what we kind of expect. There's no promises or guarantees, but there's always opinions, thoughts, and just kind of hindsight, I guess, of just thinking of what is to come, looking back at projections. So we do ask for you to share, subscribe, like, and press the little alert key so you get advised. We do know that this hour is a little different for everybody because we usually do 1 o'clock. So thank you for bearing with us. And if you're catching this pre-recorded, thank you for watching. And don't forget to share, because sharing is really important for us, because that allows others to have the same information as you do. And the more information we have, the more united we are in making better decisions. So without further ado, oh, I do want to say something really quick. Oh, wait, I have a private chat. Oh, someone couldn't hear me. I hope you all could hear me now. Thank you for the heads up. Charlie Hall says that now he could hear me. So cool. We had a little technical difficulty earlier. I do want to thank, before we start, our sponsors. This show is made possible, and everything we do at New Bloom Media is made possible with sponsors. So amazing sponsor: United Selections, Continental Floral Greens, Deli Flor, Baya Flor, Verdissimos, and Sunflower Technologies. Those are our sponsors this month and our partners. So we ask you, if you like our show, support them. It really means a lot to us. So without further ado, let's bring on, I'm going to call them. Let me see. Well, which one do I use? I guess I'll use.
Showing if they connect and bloom, oh, bloom. Showing if they connect and bloom.
There you go. I have so many options that I have to pick the right one. So sorry, guys. How are you today, Dr. Melinda Knuth and Dr. Charlie Hall?
Fantastic. How are you doing?
I'm doing great on my end. Now, I can't hear Melinda now.
You can't hear me
you now, but I can't hear Melinda.
See, I can hear her now.
Oh, no. Okay.
Interesting.
Can the audience hear each of us individually?
Yeah. Can we get a thumbs up if you're watching? I know the audience is a little slim because it's 2 o'clock, but if you could give us a thumbs up if you're watching, I'd appreciate that. So I'll just let you know what Melinda's saying. All right. At this point, we gotta just roll with it. If you are watching, I see there's a couple of people watching. Please let us know if you could hear Dr. Melinda Knuth. So let's start with some questions. I know that we had prepped some questions, but I kind of changed it up on us really quickly. So not really quickly, but I'll ask some questions. Is the big picture, how healthy? Time out. I want to say something first. Thank you for being here. By the way, thank you so much for both of you for being. I can hear my echo now, and I've never heard that before. Okay, now I don't hear my echo. All right, sorry for the technical difficulties. We're working through that. So big picture, how healthy is the floral economy right now? And what indicators are you watching that best reflect the true economic health of the floral industry today? across farms, wholesalers, florists, and supermarkets. And I think if you want to take that, Dr. Charlie, and then maybe Dr. Melinda Knuth could take that as well, or whoever wants to take it, please grab it.
Yeah. Yeah. Let me kick things off, and then Melinda, you can pick right up, because I'm gonna segue to the consumers,
Okay.
and then you can pick right up there. So does that sound like a good plan?
Let's
Sure.
do it.
Oh, hey, I can hear you now, so that's
Yay!
good. Yeah.
Okay, good.
Awesome. So if you look at the floral economy, that's mirroring, of course, the national economy, it's a very mixed picture. It's there's no other way to describe it. That the momentum we had coming out of last year has kind of moved sideways. We've not deteriorated that much, but we have not necessarily gained a whole lot either.
Mhm.
And
Okay.
there's some trends that are disturbing, and so let me explain what I mean. So if you look at the sales of flower seeds and potted plants, and using USDA data, no, the Bureau of Economic Analysis data. It's not the USDA data. It's the actual GDP data. If you look at that data, we've plateaued in terms of floral sales of flower seeds and potted plants. So we've plateaued. We're moving sideways, and the last 3 months, June, July, and August, we started coming down slightly. Normally, I would have September data and I would have October data to report on. But because of the government shutdown, I'm flying blind here. And so I'm left to other anecdotal data, and I'm left to other secondary data sources that are non-government in nature to really piece things together. So I'm literally just Humpty Dumpty here in terms of data, and I'm trying to piece all that together using non-traditional sources. So my usual data is it's woefully behind. So I don't know whether we continue that downward trend, or whether we continue moving sideways, or whether we pick back up like we did, Saeed, in 2022 and 2024. We had a slight dip for 3 to 4 months, depending on which year. And then I thought, okay, now we're going back to the trend that we were pre-pandemic, or before any economic downturn that we had before 1948. All the economic downturns, when people are staying at home more, they buy more flowers. Yeah. It's actually pretty good for our industry. So, and then when the recovery starts, that's when we typically take it on the chin, because people are traveling. They're buying more stuff at bars and restaurants and going to Disney. And so they spend less on flowers during those time periods. Now, we have a base amount of demand anyway from weddings and funerals, et cetera. But I'm telling you, just the overall final demand typically is correlated with those economic downturns. We get the shot in the arm, we start the recovery, and then we come back down to where we were pre-pandemic or pre-economic disturbance, and then we start our glacial growth pattern from there. And as we've done that every single economic disturbance, including the pandemic. So, but we haven't started down yet. We had this shot in the arm. We've been moving sideways. Except for those 2 time periods in 22 and 24 where we started down, and I thought, oh crap, this is it. Oh, can I say that online?
Say whatever you want. You're a doctor.
I can make up words.
You're a doctor. You can make stuff up. They're cool.
So here we are going back to trend, and then we've moved. We've had a little downward trend, and then we moved back up. And in fact, in 24, we were higher than where we were in 23, and we were higher than we were in 2025. We've been higher than where we were in 24. So from that aspect, that's pretty good for our industry. But retail sales have been strong altogether, in spite of the tariff structure, we've seen consumption hold steady. Now it's this first, the September consumption report just was released in the last 24 hours. And so in September, we only increased 0.2%. Just again, moving sideways.
As an industry.
As an industry, but also as retail sales in general.
Okay.
Right. But again, I'm trying to piece together the floral side just from all the bigger pieces of data and put that Humpty Dumpty piece of data back together. So it's not dire, but it's not stellar. So again, moving sideways is my theme for today in many respects. Now, in the first quarter of this year, we had a negative GDP. And it's negative because we have four pieces of our GDP picture. What you and I spend on flowers and everything else, what businesses spend on investment and people and equipment, government expenditures, and then lastly, net exports. It's exports minus imports. So in the first quarter, remember when the people were getting bombarded with various tweets from he who shall remain nameless, but various tweets, then they said, well, we're going to import as much as we can before these tariffs take place, and which was April 1. So we saw monumental levels of importing going on, trying to get ahead of that. So imports are a drag on our economy because we don't get paid for imports. We're paying other countries for imports.
For imports, yeah.
Yeah, so we're importing. So of course we would have a negative GDP. And then the media sees negative GDP and says, oh my word, sky's falling. But then we come rebounding in second quarter, 3.3 something, close to 3% growth in the second quarter, but it was exports carried the day because we stopped importing. And so that was a plus to GDP. Mm-hmm. So we were basically back to a growth pattern there. And ever since then, here's the interesting thing, is we've been selling out of that cheaper inventory because it was pre-tariff. So we've been selling out of that cheaper inventory for 6 months. We are just now seeing the impacts of the inflationary impacts of tariffs. Just now. We're starting to see it in the data. And so we're both CPI, the Consumer Price Index, and the PCE, the Personal Consumption Expenditures Index that the Fed uses to make its decision about interest rates. Both of those are close to 3% inflation. And remember, the 2% is the Fed's target. So they decreased interest rates 25 basis points in their last meeting, and we were thinking that they were going to do so in December at their FOMC meeting as well. Personally, I don't know that that's going to happen now because we're seeing the inflationary pressure in the data and the labor market is slowing down. So the Federal Reserve has two functions: to create an environment of full employment and to reduce price pressures in terms of inflation. Yeah. And so it's a really a hard job to do both at the same time. And they've done remarkable in terms of how they've managed so far. So I don't know whether they'll lower the rates 25 basis points in December, but I'm almost positive that in the first half of the year, they'll come back with another 3 25 basis point decreases.
Another three? A total of three?
Yeah. In the first half of the year. And there may be another couple in the second half of the year, so that the federal funds rate will go all the way down to 3.25 to 3.5 by the end of next year.
Wow.
Now, where does that come into play in terms of the rest of the economy? Well, it goes back to mortgage rates. So as the federal funds rate comes down, mortgage rates come down. And as mortgage rates come down, right now there's a tipping point. Then that target is about 5.5%. And with mortgage rates right now 6.25%, they come down about 5.5%. We're going to see all the people waiting in the wings to buy and sell houses.
Buy and go in, yeah.
They're coming back in. So then we're going to see a lot of economic activity. And Saeed, when we see a lot of economic activity, we see people buy flowers.
Yep.
So that's the thing that we're kind of in a holding pattern, moving sideways, and we're waiting on these good things to happen. Now, obviously, tariffs are a drain in terms of inflationary pressure. So the key question is how does that inflationary pressure going to influence the Fed in terms of lowering interest rates, which are in turn going to lower mortgage rates? Now they don't move one and one. Now, if you had 25 basis point decrease in the Federal Reserve, the federal funds rate, that doesn't mean that mortgage rates are going to come down 25 basis. They're correlated, but they don't necessarily move in the same magnitude all the time. Mortgage rates tend to be more sticky. They come down more slowly. So that's why I'm saying it's going to be middle of next year before we start seeing some significant movement on the mortgage rate side. But when it does happen, then you hold on, because the roller coaster is it's climbing. I guess I should come up with a different analogy, because the fun part of the roller coaster is when everything's going down. We don't want everything to go down.
That's who you are. You might get excited when you're going up. So, Charlie, I have a quick question. This might be related, but I'm pardon my ignorance, but I'm a little confused in the sense of the tariffs, right? Everybody believes that the tariffs are being paid by the country that is exporting. Right. But in all reality, I've heard many farms having to take out huge loans to cover their tariffs because they're having to pay this up front. And then the company, like the wholesalers, et cetera, will pay them in 30, 60 days. So they're having to take out loans, which then the way that I look at it is, if I have to take out a loan of $1 million to cover my tariffs, then I can't hire people right now. I can't do this. I can't, because I need to cover my loans. How is that affecting businesses? Because I don't see, and I guess I was duped too. I kind of thought that it was okay. That other state, that other country is going to pay for it, and then it'll trickle down at some point. But does that work? Does that help us? Does that
trickle down doesn't work?
Trickle down doesn't work. Period. In my opinion. But I'm just shocked that when I found out that the companies are actually the ones flipping the bill. And that puts more pressure on us. Is there another way around that, or we're just getting the cat the same way?
That's a great question, and Melinda stole my thunder.
I just couldn't hold it in. I'm sorry.
I know.
I was like, no.
You were trained very well, so that's a great answer there. In terms of the tariffs, in spite of what we were told in various tweets and pre-election campaigning, you're exactly right. It's not the exporting country that's moving product into the U.S. that pays the tariff. It's the customs broker or the importer of record that pays the tariff. And that has caused quite a working capital dilemma for some of the folks that are bringing product in, no matter what the product is. And what that's done is they've had to renegotiate some lines of credit and so forth with their banks, and they are basically banking the rest of the industries, all industries,
more than ever. Yeah.
And that's led to having to buy product earlier, because it's not the supply chain now that is the limiting factor. It's getting all the paperwork and everything and the tariffs paid that's become the bottleneck. Okay. And for some industries, it's easier than others. So, and then, there's been recent threats regarding the floral industry. There's 100% tariffs being proposed for Nicaragua, which affects our young plant sector pretty heavily in Nicaragua. Make the young plants coming out of Nicaragua twice as expensive. And then you've got the Colombia tariffs that are being proposed. I mean, there's some issues, and the question is, are there going to be carve-outs or not? Well, now we're still in a holding pattern, in terms of those questions about whether there's going to be carve-outs.
Can I
Melinda?
add to here? Okay. I think it's important for people to also be aware that there's different categories of tariffs that are being applied right now. There's the blanket tariff, which is under the IEEPA, which is currently being contested at the Supreme Court. And that's the 10% blanket tax on everyone. Then there's also the different categories of sector as well as state specific. So the BRICS countries versus China, other countries that we are not in complete agreement with is a very nice way to say that. And then there is also the fentanyl and the free speech tariff categories as well, which are being applied. And so there's different categories of tariffs that are being applied here. And what Charlie's talking about it with Nicaragua is the fentanyl category that they're threatening to apply to Nicaragua, because there's a belief that fentanyl is coming from certain countries. Like right now, Canada and Mexico are have that applied, plus the 10% blanket tariff on some of their product. It doesn't apply to all products, because then we get into our trade agreement with them. And so some of that doesn't apply to that. And then there's also the question of the ruling that just came out in, well, it's not really a ruling. It was more of a, this is what we're going to do on the 19th. And the Trump administration said that some agriculture products will now be completely exempt, but they're not being fully forthcoming on what those categories are. And so that's a big question is, does that include flowers? Does that include all fertilizers from any country, including Mexico and Canada and like Saudi Arabia? Doesn't include those. We don't know. We do know it applies to coffee right now, but what other agriculture products? We're not sure.
Coffee. You didn't want a bunch of grumpy people.
Yes. Yeah. That's not, if you go to the bulletin that's posted, it's from November 19th. It came out in the evening, kind of like the hot off the press thing that just came out yesterday, funny. Charlie.
Yeah. That's a good one.
Yeah. And it came out, and the first bullet point that this applied to was coffee and chocolate. But then they were like some fertilizers and other agriculture products. But that's the big question. What does that include? And who does that apply to? And under what precedents? Is it the IEEPA? Is it our different trade agreements from 1962, 72? Which ones does it apply to?
Well said.
Thank you for sharing. Thank you for sharing. And I want to move on from tariffs, but tariffs are still important. And I think that it's ever changing, and it's just really important to have a quick little review on them as well. But I know many of us, especially business owners, are just like exhausted of the trampoline of tariff decisions. But Charlie, just a quick answer if we can get it when it comes to this question, because this is more personal. I'm just kind of stuck here.
If I could ever give a quick answer, give us one now.
But let's see if we can do this. Doesn't matter where the tariffs are imposed, right? Doesn't matter that if it would have been the other way around and the tariffs were imposed at the place of origin versus being imposed here, would it affect differently? Because I just see it as unnecessary pressure on companies, right? And you can hear their panic when we first did the interviews, their panic of knowing that they had. So does it affect, or it's just the same thing? It just kind of happens. Someone's going to take the bill.
I'm not sure I quite understand the question.
Okay. So if, let's say there was 100% tariff on Chinese goods. Yeah. Does it make a difference for better or for good if China would have to pay those tariffs first, right? Because the way I look at it is that we're the one flipping the bill for the tariffs. If anything coming into this country, we have to pay an extra tariff.
Have to pay. Yes.
Could that ever have been flipped in that sense that you make the country of origin take care of that tariff? I guess the answer is no.
I can't think of a single scenario in which that's happened.
Okay. So at all scenarios, you put a tariff, we're supposed to take that hit.
Yeah. Yeah.
Okay.
The country imposing the tariff is the one that is saying that we're going to make those imports more expensive to whoever here in the country is buying them, because we're going to protect our domestic industries. That's the classic argument. We're going to protect those domestic industries. The trouble is that, remember, we've built a just-in-time globalized supply chain over 4 decades. We can't build domestic industries fast enough.
Things have changed.
To change fast enough in order to compensate. So in the short run, it is the consumer. Now, one thing we don't know is what are the price concessions that the exporting country are going to give. If there's that blanket tariff of 10%, we don't know how much they're going to lower their price to make it more palatable for the customs broker or the importer of record to bring product in, so it's not quite as expensive. The other thing we don't know is that how much of that 10% is the supply chain going to pass on to the end consumer. And initially, here's a big caveat. Initially, firms have the capacity to right now absorb some, if not all, of the tariff. Now, why would I say that? It's because corporate profits, if you look at a graph of corporate profits, they're at a historic high. If you look at the stock market and so forth and the performance of the Fortune 500 companies, it's been stellar, and corporate profits have been outstanding over the last 4 years. We had the Bipartisan Infrastructure Act, we had the CHIPS Act, we had stimulative policies in place that were very favorable to businesses. So regardless of what we've been trying to be told by one side of the fence, the economy over the last 4 years has responded to those stimulative policies, and they worked because we saw it in GDP. Is our GDP up here in the 2.5 to 3 range consistently during the 4 years prior to this current administration. So it's a conundrum, because we don't want to take away from corporate profits, because after all, that's the money that they use to invest in people and equipment, et cetera. Mm-hmm. Except the labor market's weakening, wages are growing at a much slower rate. Investment in equipment and technology, except for AI, has been declining. So they've not spent those dollars in the way that they typically spend those dollars because of the uncertainty. They're waiting to see, and they're having to pay tariffs. And so there's this moving sideways for the whole industries across America.
I think we should call it the Cupid shuffle economy. To the left, to the left, to the right, to the right. I think we should call it that.
That's good. I wish I'd have thought about that. That was good. Yeah.
So let's jump into some consumer trends then. But thank you, Charlie. So let me boom. This year review, what surprised you most about consumer behaviors in 2024 and 25? And I think Dr. Melinda Knuth could take that.
Oh, man. I think a lot of it wasn't surprising because of like what we're seeing right now in the economy. The consumer confidence is, as Charlie has said in many presentations, it's not related to how they're spending, but the way that people are behaving is cautiously. So it is kind of mirroring in that way. Like people are just very cautious of what's going on. And so, but that's not surprising. I think what was a little bit surprising is that, like speaking about AI, just the amount of AI that's being used around, and then I thought that people would be more receptive to AI than they are. There's a lot of consumers who are very cautious of AI. And so, and I think it's because they can't tell what is AI versus what is non-AI, like what's real. And that was very surprising to me, is is in that sphere. However, some consumers and some people on this call may disagree and be like, well, no, that makes sense. I also don't have a full trust either. And so that was, I guess, unexpected. Oh, Charlie, did you want to say something?
No.
Oh, okay. I thought you were getting close to your microphone because I thought you were gonna.
No, I'm
Okay.
listening intently and my head's just drifting right. That was right.
Okay.
Sorry.
I would say that another area that I wouldn't say this is incredibly surprising, but this is something that was like, oh, okay, is that weddings are smaller, funerals are smaller, people are spending less in events. Now, this is something Charlie and I have talked about over time. If I distinctly remember talking about this in 2019, and now we're seeing it come to fruition. And so that over the past couple of years during COVID, or I shouldn't say during COVID, after COVID, we had events come back pretty big because people were happy to get together again and such. But now we're seeing that effect come full circle of the smaller events. And so that in particular, yeah, I wouldn't say terribly surprising, just, okay, we're finally seeing it in full force.
Yeah. Any input there, Charlie?
Yeah, let me jump in.
Mm-hmm.
If you look at the totality of consumers, not all of them are equally spending, nor is there equality in terms of a capacity to spend.
Mm-hmm.
So if you look at who our main market is for flowers, it's basically the top 20% of income earners.
Wow. Okay.
That are the bulk of our flower purchasers. In terms of events in particular, in terms of higher priced arrangements, it's the top 20%. It's basically the top 10% is everybody that are making $176,000 a month and more. I mean, a year, not a month.
Okay, I was like, wow.
Yeah. $176,000 a year. That's the top 10%. So the top 20%, I think, goes down to $103,000. So those are the families that have been carrying the floral industry for many years. Those are also the families that are spending the most today. So they're carrying the consumption numbers. So that's roughly good news, that in spite of the fact that consumption is slowing and it too is moving sideways, that our main customer base is among those who are doing the spending. So that, to me, that's good news. Now, the bottom 80%, I mean, they still buy flowers because they have occasions and birthdays and Mother's Day, etc. They still buy those flowers. But when you look at the data and you cross tabulate those that are spending the most, it's that higher income group. And that, again, that top 20% is still spending right now.
Mm-hmm.
Right now. Yeah.
Yes, right now. Yeah.
And do you have any data on what they're spending on when it comes to flowers? So are they still self-gifting? That comes to the self-consumption, right? Or are they giving gifts? Are they, you said they're making smaller events, which we saw that in 2008. But do we know where they're still spending the majority?
So since we're seeing the smaller events, it's going into more like small gifts or like gifts to each other, and then self-purchasing. Because majority of our floral purchasing, again, used to be events, but since those are getting smaller, but we're still seeing the buying happening, it's going into those other categories. Now, the percentage that are gift versus self, I can't tell you off the top of my head, but historically, it's been mostly gift, and I would say like 30-40% for self. So that may have changed over the past year.
So it's interesting it's about self-gifting. Today, I was talking to one of my team members in the Philippines, and I give them all six. I give them a small per diem a month to buy flowers for themselves. Right. So one of them went to a flower market in the Philippines and said that there were so many. She called them girlies. I guess they call themselves girlies, but so many girlies or so many young ladies purchasing flowers for themselves.
Mhm.
I was like, wow, the Philippines got this right, right? And they were doing self-purchasing for themselves and taking pictures of themselves buying flowers, which was really interesting. So I think worldwide, it just seems like the consumption of self-giving is kind of increasing. Do you have any thoughts to that, Mr. Dr. Charlie Alt?
I think that's while we may not have all the data that we'd like right now to be able to prove that. I think anecdotally, I think you're spot on, because the mental health crisis is truly at a pandemic level. If you look at the numbers of people that are suffering in some form or fashion from depression or some other related mental illness, stress, then I think our industry during the pandemic made the point that the best way to self-medicate is with flowers. And so I think we're seeing some of that. I think we've made some progress, but I don't know how much we've moved the needle. I know we've moved it, but I don't know how much we've moved it.
Yeah, not sure.
And how could we find that number?
Well, it goes back to the consumption numbers, the personal consumption expenditure numbers on flower, seeds, and potted plants. That's my best source for going to all the flowers, seeds, and potted plants that were purchased in the U.S. That's very good data. That's coming from multiple surveys that are going into the GDP data calculations, and just right now I don't have it.
Gotcha. Yes, because we had to wait.
Yeah.
Yeah, we're
had
waiting
to wait.
still.
We
Yeah.
were waiting. Got it. When it comes to, if you have this data, Dr. Melinda Knuth, when it comes to just trends, are there any trends that we saw in colors or in styles or anything like that that you might know at the moment?
Those are really seasonal, and it's very dependent on usually the color of the year. So, like we could predict, like, oh, certain colors are coming back, but it is very dependent. And fashion and flowers, I kind of perceive as color-wise going with fashion trends.
Mhm.
Whatever the colors of the year are, that usually pops up in some form or fashion. Something I've heard also anecdotally is that the maroon, or not the maroon, it's like the navy peach combo for weddings is coming back.
Okay.
I was like, oh God, because that was like really hot for a little while. And I've heard anecdotally that's coming back, whether that's true or not, like nationwide, not sure. But I've heard things of that nature. As for colors, yeah, it's very dependent on what the color of the year is, and following those trends.
It's interesting you say that. I had two designers on the show, and they were saying how mocha didn't take off as people expected. So you really can't gauge it, right? It's really a shot in the dark, you know?
Yeah, it's hard. And it changes so quickly that by the time we harness it, it's kind of like, oh, uh-oh, and then it's gone.
Yeah. And then it might skip a year.
Yeah, and then it's back.
And then it comes back. So question here, talking about everything we talked about today, what strategic moves should growers, wholesalers, and retailers make to stay competitive next year and to prepare for the up or down? Any thoughts?
You can go first, Charlie. I gotta think about
I'm just waiting. I always have an
He's
answer.
being a gentleman. Mr. Charlie Hall is being a gentleman.
Yeah. The first thing is you've got to manage the balance sheet as every bit as much as you're managing the income statement, the P&L statement. If you're not, you're going to find yourself behind the eight ball because of all the cash flow issues that we were talking about earlier, the working capital issues. You're going to have to really manage that on the balance sheet. So you got to make sure your inventory at the proper levels, that you're not over leveraged, and that you have the cash to be able to handle some of the uncertainty that we're experiencing. And we already talked about the debacle for those point of first handling for importers, and just the huge demand for cash to pay tariffs right now. So it's messed up with line of credits and so forth. So you got to manage the balance sheet. So I've often referred to that in the past as you got to sharpen the pencil. You got to manage that. But then you also have to be very nimble, because certain times like this, uncertain times like this, there's tremendous opportunities. And I think we've seen some of that this year, Saheed, in terms of the merger and acquisition activity. And I think we're not out of that. In fact, we normally see more shakeout in the industry after periods of prosperity than we do under periods of economic constraint. Interestingly.
On that note, Charlie, I'm pretty sure people really want to know this. Is consolidation good for our industry, or is it not good? I don't have an opinion. It is good for our industry.
No, you said, is it good or is it not good? I
said, yes. Good one, Charlie. Yes, no, yes.
Yeah. It can be good, right? When there's economies of scale that are developed, it can be good from a supply chain perspective, from the value chain and capturing value. Because remember, every single thing we do does one of two things: either creates value or it destroys value. And so we've had too many for too long with activities in their value chain that weren't creating any value. So now under consolidation, you have an opportunity for a company that has a well-honed value chain to take over a bigger piece of the pie and not only gain operational efficiencies, but to gain in terms of their ability to express their value proposition. It's a bigger audience that they're addressing. And so if their value proposition is well honed, then it's a benefit from the supply side, and it's a benefit from the demand side. So it can be advantageous. But what we find is it's all cyclical. We'll go through a period of consolidation, and then firms will become too conservative. Right? Corporate profits will start rising. They'll be too conservative. They become too not risk averse enough, and they start purchasing businesses that have no business being purchased, and so that drains down their working capital. And then you have a little bit of an economic downturn. They don't have the working capital to ride out, and so then you see the deconsolidation occur. So it's all cyclical,
and we've seen that before.
So in the short run, it can be advantageous in terms of the overall supply chain efficiencies, and of course internally for the acquiring firm, developing those economies of scale and lower cost per unit. So it can do that. The big thing that I always look at is what are the cultures like between the company that's being acquired and the acquiring company, because the single key success factor is merging those cultures. If you can't do that, I don't care how many operational efficiencies there are. I don't care how many supply chain efficiencies there are. It ain't going to work. It's just not going to work. So it's muy importante that you get that right in terms of culture and matching those. And we have a number of acquiring firms right now, or firms that have been acquired. And from what I can tell, those cultures have matched up pretty well. So I think I have a pretty positive prognosis for those acquisitions that have already been made because of that.
Yeah, it seems like they have that culture recipe pretty well. They know how to blend it all in. Any strategic moves for florists, wholesalers, growers when it comes to trends and consumer trends, Dr. Knuth?
So I was thinking about how to phrase this, so that's why it took me a minute, because I was the short of it is keep your customers, but that really doesn't mean anything without explaining that. So I had to think about it a minute more. So don't be shorting your marketing budgets. If you're going into a time period where you are, you're like, oh, I don't have very much capital, don't short your marketing budget. Do not do that. This is not the right time. You really shouldn't do that ever. But this is especially not a good time. If we're in a lean period where economic growth is not great, this is when you need to be keeping loyalty with your customers and trying to appeal to new customer groups to maintain what you're doing. And so the big thing I want to share is that keep on with your marketing, beef it up a little bit, and make sure that you are doing your target market approaches and your campaigning appropriately so that you're maximizing your marketing dollars there.
I'm going to quote Melinda because she said this in the last podcast or the podcast last year.
Mm-hmm.
This is the time to capture mind share. Don't worry about market share. It's all mind share. And to do that, you can't scrimp on your sales messaging or your marketing dollars. So,
I forgot to ask that question. Thank you so much for bringing that up. I'm writing and I want to quote you. I hope you don't mind. I'm going to use some quotes that you said here because I truly believe that, gosh, who is it that said it? Ford said it, that stopping your marketing is like stopping your watch because you want to save time.
Yes, you're cutting yourself off at the neck. You can't do anything more. Your sales are going to stagnate. It's
exactly. So it's be present all the time. So when the dust settles, you are the shining light.
Yeah.
And that's the way. Again, it's kind of self-preserving for me to say, "Hey, keep on marketing," but I'm glad that two doctors in this field are saying the truth. Anything you want to add to that, Dr. Hall?
Well, other than it's the mind share and managing the relationships.
Mind share.
Because in the floral industry, we're all about relationships. We live and die by those relationships. So from a supply chain perspective, we gotta manage those even more. And from a customer perspective, we got to continue in articulating our value proposition in terms of the benefits, and particularly the health and well-being benefits.
I love that you brought that up because that's like what I'm talking going into next year with for sure. Any last words? Thank you again so much. And we did have one quick comment. She was correcting me, I think. Miss Kim Boyd, but I love it, Kim. She's awesome. Maybe not mocha, but rich dark browns are everywhere in fashion. So yes, I do recall that. I remember my wife wearing a couple things that are like almost mocha but darker. So maybe they just got the wrong mocha tone. Wrong. That's what they did. If there's any final questions, please ask. But Dr. Hall and Dr. Knuth, any final tidbits of wisdom for next year?
Keep the course is the thing. I think that's been summarizing what we've talked about today. Keep the course. Try your best to keep everything going, and don't be afraid to try new things, be innovative, be new with what you're doing.
Yeah. I'll just add that it's too early to start lowering prices to try to generate interest.
Okay.
You got to focus on the demand side rather than the supply side. We may get there, but we're not there now.
So too early to start lowering prices.
Yeah, it's too early to start discounting and going in that direction to try to generate interest. Yeah.
Dr. Hall, you had mentioned something, one of your speeches or one of the conversations maybe last year about credit card debt. Mm-hmm. Is that still an issue that we're seeing? Mm-hmm. Is there going to be a credit card debt bubble?
Yeah, I still got my eye on it. And if you look at where we were, this is where the credit card debt was during the Great Recession. This is where we are now. So it has increased from here to here, on an air chart here. But what has increased the most is student loan debt was down here, and now it is up there.
Ooh, I thought that would go away.
Yeah. No. Because you had all the what do you call it when you forbearances during the pandemic when people didn't have to pay their student loans. So if you look at the number of loans that are past 90 days or more delinquent, then that number shoots up. If you look at the number of people who are 90 days delinquent on their credit cards, that's shot up, but not nearly as much as the other. What about mortgages? Well, the mortgages, they've gone, I can't get my hand right there. So down here to about right here, but nowhere near what it was during the Great Recession. nowhere near. So the number of foreclosures is not there. So we're not seeing a lot of the financial risk that we saw back in the Great Recession days.
Which is a good thing.
It's a good thing. Now, there's a caveat. There's always a caveat. We're adding another 3.3 to 3.8 trillion to the national debt because of the One Big Beautiful Budget Act. Now, I've been on record saying the One Big Beautiful Budget Act, from a tax standpoint, is going to affect positively every business in America. So every business listening needs to pay attention to the tax provisions included in the One Big Beautiful Budget Act. However, as a country, and you look at debt levels, the Tax Cut and Jobs Act of 2017 added $4 trillion. We're adding another almost 3.8 trillion, 3.3, 3.8 trillion. That catches up with us over time, because we got to make sure that we address that over the next several years, or it could lead to a downturn in and of itself. Now, I'll leave it there, because that's a whole other podcast subject, right?
Yeah, we can keep on going all day. So thank you to both of you so much. I really want to wish you a happy Thanksgiving, and thank you for giving of yourselves and all the information and wisdom that you have to our floral community, to the floral community overall. Thank you for joining today.
Well, thanks for the invitation, and I always love being here, because our message is so positive.
Yeah,
and people are going to buy flowers.
They are.
Yeah.
They're not going to stop.
Yeah. And I remember something you and I kind of mentioned, that we're not resistant, we're resilient, right? We are economic strain resilient, which is very important, because we're one of the first, correct me if I'm wrong, please, Dr. Hall, that we're one of the first to bounce back. So there's always light at the end of the tunnel.
There is. Yeah. Particularly since that top 20% is going to keep right on spending.
We keep on spending. We just need to know how to target to those top 20%.
True that.
Right?
Yeah.
Dr. Knuth, any statistics or anything new, any reports that you've done? Sorry, I ended it twice already. We're going back, but any statistics or any reports that you've done that is available to the public, that I think it's really important?
Yeah. So all that I work on, as well as like collaborators like Charlie and others, they're listed on my website. And I think I can reshare that with you, Sahid, if you need. But everything that I work on is listed up there. And so any new reporting, one thing that we're currently working on, Charlie and I and another colleague, is a houseplant spending report. So that'll be coming out in the next year. And that's the basis of what we're currently working on, or I'm currently working on, I should say.
I'll be sharing that at the website, and doing, I think I'd like to do a little social post on it.
Okay.
For next year to get that out, so people know that there's all that great information there, and it's free to them, right?
Yes, exactly.
Because someone already flipped the bill, right?
Yeah. Oh yeah.
So it's great. Again, here, last final thank you. Thank you very much for joining. Truly appreciate all the wisdom you share, and thank you for your time. And have a happy Thanksgiving with your families.
Thank you.
Well. Thank
And
you.
you as well.
Thank you. Take care. Bye-bye. Nice seeing you. Bye-bye. All right, today I was a student, and I love being a student, especially with two doctors that have so much information and give with such big hearts. So really, really thank you to Dr. Charlie Hall and Dr. Melinda Knuth. I'm getting a little used to saying doctor, but I think it's to be very respectful to both of them, as they've earned that. With a little bit of housekeeping today, I want to share some people that we're going to have on the show. Give me a second real quick. And there we go. This already happened, so I'll skip this one. This already happened. I'll skip that one. This is going to be, I'll tell you right now. Let me take off this banner real quick. Boom. There you go. So November 28th, we're looking at Black Friday. Hey, that's funny, because Bill Schaefer wears a lot of black. So on Black Friday, we'll be with Bill Schaefer for just 10 minutes. It's a Friday thing that we do here with our correspondents, Floral Trends and Innovations. So please tune in and join us as well and bring your questions. Come selfishly, asking a lot of questions that you might want to know. Bill Schaefer is owner and creative director of Schaefer Designs, travels the world looking for trends and floral trends, fashion trends, and more. And is very experienced in dealing with big events. So he's our event designer specialist for the Bloom Show. And then we're having, I believe that's going to be our last show for this month. We are having one show, which is the Penny and Ace show, and they're going to be talking about holiday trends when it comes to Christmas and Valentine's Day and New Year's. So get ready for that. That's pretty cool. And the Bloom Together event is happening, and this is open for everybody in the floral industry. It's something we've done for the last 6 years, and the purpose of the event is to help celebrate and show the power of networking, collaboration, and building community within the floral industry. It's a combination of 60 different companies that come together. They all put a contribution, and all the proceeds are then donated to and contributed to Seed Your Future in American Floral Endowment. And we've been doing that for the last 3 years. And we did another organization the 2 years before that. So, or we're going on a third year with them. So it's super exciting. It's an awesome opportunity. It's a movement of sorts where the community keeps on growing. Last year, we actually doubled our registration. We increased our contribution. It just keeps on growing and growing and growing. And we really want to invite everybody. Plan around it. It's only for one day. Starts at 7 p.m., ends at 12 a.m. And it's truly a place that if you want to plug into the floral industry in a community-driven way, please join us. And from 7 to 9, we're doing more of a networking style. And then from 9 on, 10 o'clock, the party starts. And we're having a live band. We're drink specials, 100 tickets to the free 100 drink tickets to free drink ticket to the 100 first people that join us. And let me come here to say thank you to our sponsors. Give me a second real quick. And again, truly want to thank our sponsors of the show, the Bloom Show, New Bloom Media. Everything is done as a business, right? So we really have grown this with the support of everybody around us, and we thank everybody for their support. And as it continues to grow, we do it, and we can do it because of the support of sponsors like United Selections, Continental Floral Greens, Deli Floor, Bay of Floor, Verdissimo, and Sunflower Technologies. And today we just signed two other ones. So we'll be letting you know those as well. And as we grow, we're really about giving back to the floral community, and that allows us to give back more to the floral community. And the way that we ask is, if you support our community, you support New Bloom Media, you like the Bloom Show, you find value, you get what we're doing in helping the floral industry innovate, connect, and bloom, then please support our supporters, and let them know, hey, we're supporting you because you support the Bloom Together or New Bloom Media, or at least get to know them, learn more about them. Would truly appreciate it, and that makes it all worthwhile for everybody involved. So again, don't forget to subscribe, like, and share. Thank you for spending your time with us, and learning and educating. And if you just tuned in now, watch and rewatch. I do want to give a shout out to Kim. She says, LOL, never correcting. I know, Kim. I know. But mocha is a dark brownish, right? So I guess this is a tone of mocha. If you really look at it, they kind of got it pretty close this year. And we'll see what is happening for next year for sure. I know Thurs threw out a color of the year, which I think it's like a maroon burgundy-ish looking color. But let's see. You can't really read a crystal ball all the time, right? So you could nail it as close as possible. Again, thank you everybody for joining. Thank you for watching. Tune in next week and see you later, and have a great one, and happy Thanksgiving. Take care.
The bloom, showing if they connect and bloom. The bloom, showing if they connect